Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, the 11th of June, 2025. We're right at 6:30 p.m. Central Time. So, interesting day. The gold up $41, silver moving a little bit higher, copper market about steady, platinum down. The dollar got hit today. Foreign currencies tonight, they're a mixed bag, as you can see. Some up, some down. It's not a real trend one way or the other. The bonds and notes, well, they had nice rallies today in the futures, which means yields fell. And tonight they're stable as the market's looking to see what next. When we take a look at the energy part of this market keeps moving up towards $70. So what's going on? Well, let's talk about a few things first. You're going to get the other leg of the inflation number tomorrow. We're going to get the producer price index, and that'll come out at 7:30. I think it's so important that I put it here tonight. The market's looking for 0.2 month over month, and they expect the core up 0.3 month over month. I'm not seeing declines, and I realize people are going, oh, we haven't seen the impact of inflation, but it's still just about every month you're gaining an eighth or you're steady. Over time, that's an impact. What I do agree with people on, since February, 4 months running, we haven't really seen the impact of the inflation. The tariffs are in place. We're hearing more and more about those tariffs with what Scott Bessent said today and Howard Lutnick. Basically, the deal with China that we're making is a framework for other parts of the deal. That's really the way to look at it. I expect that rare earths are going to flow, and I think that China will be getting certain chips, software from the United States as well. They haven't said that yet, but read between the lines. That's what's there. In the jobless claims, you're going to see that they come out tomorrow at 7:30. The EIA natural gas report will come out tomorrow at 9:30 in the morning. At the end of the day, about 1 o'clock really, we saw the Treasury Department budget deficit, and this thing's growing. It's $316 billion. The month before in April, it was $258 billion. A year ago, it was about like this. Then the receipts and the outlays. If you saw Scott Bessent today, they tried to pin him down. He had two big meetings in front of Congress today, and they were trying to pin him down. When's the Treasury going to run out of money, the Fed, and all this? Well, to make a long story short, July, August, he wouldn't give you the exact date. He wouldn't be pinned down. But we know that what they're trying to do is for the 4th of July, the Senate to get out of its hand some bill that goes back to the House, and then that'll come back after the 4th. If they can get it to the House then, they'll come back after they get away for their summer little break, come back, and then they've got to get this done because money is running out. They can always vote to raise the debt limit temporarily. We've seen this over and over because Congress gets nothing done when they're supposed to. This could be a change, but they really don't. All right. So one of the things impacting the metals tonight is that during the day, you saw that in the morning in my full research report, I covered this. I said, Iran is going into this meeting this weekend, and they're telling you everything they're not going to do, and they're telling the U.S. going into the meeting, we know where your bases are, where your personnel is, and we can strike them all. With that, by the end of the day, now we're seeing the embassy go down to evacuation process in Iraq. I don't know how many people will stay, but they're getting rid of certainly the families and so on, and now it's spreading through the Mideast. So those threats aren't going to get Iran anywhere. I think that the fact that that was done has gotten President Trump to the point where he's beyond frustrated, and the question is, does this market go rock and roll time where either the U.S. and Israel, or Israel by itself, is going to be let loose to make a decision? Do they hit the areas? Russia kept its promise, and that's important. Today, and Kremlin agreed that Putin had done this. They offered to take uranium material from Iran, store it, process it into commercial grade, and deliver it back to Iran as they need it for peaceful purposes. Be careful here, all right? They're playing with fire, and that's why the gold got a bid, and silver trails to a degree on things like that. I also think it's part of the reason the stock market got hit today. When we look at the gold market, you can see you're back up and knocking on the door. Are you going to go for the all-time high close? It could happen. I mean, if you wake up in the morning and all of a sudden the U.S. is attacked, which they won't do before the meeting takes place, but that could be next week. Markets called a futures markets. People are stepping in. You know, I hate when people do that because if you're a hurricane player, for example, you know how many people go broke playing for those hurricanes that generally they don't happen quite the way you think they're going to happen. Not to say they can't hit hard, but it's become problematic. There are weather futures, or I think they are. I don't have any client that's traded them, but they got to be out there somewhere. In the gold market, you can see the sideways action that has gone on through all this. You have the higher high, lower low. Another benefit to gold right here. If the PPI comes in hot, again, I'm in the camp that says inflation is here. It's not going away. We have not had the full impact of the tariffs be seen yet. And from everything I'm seeing, there's not one deal that has been completely finalized. Yes, we've agreed on a framework with the UK. I haven't seen a signed, finished deal. All right. And then we heard today that there's 18 more deals in the pipeline that could all happen relatively soon. Well, let me explain what that means. It's the same thing that the UK has. The U.S. is expecting that as a framework. There's a memorandum of understanding, and those people won't be hit come July 9th with whatever the president decides to do on all the other countries that apparently the deals aren't acceptable from. I'm just reading between the lines. But why are they saying only 18 deals are good? So that could help the gold market. When we take a look, you can see how the markets come down, fought at the 18-day average of closes. I call that, as you know, the line in the sand. Charts are interesting. You know, when you're looking at charts, people call it tea leaves, people call it whatever they want. But there is a line that the market likes to go to, and if you chart long enough, you realize that where the market likes to go to it and sit there, and from there, make a decision. Can it springboard up? Can it go down? Is it going to fail on that? Pull back to it. This, to me, is the 18-day average. And I've watched this now going into, I'm thinking about this, 5.5 decades, and I learned moving averages before I was even a broker. And I see that. I see it over and over, and I'm in love with that concept. Then I look to see where might the market have its resistance points. Once I learned Bollinger Bands, I went bananas on it because I always wondered, why does the market stop at that number? What is stopping these spots from doing that? Why is that happening in that zone? If you take these off, you don't see that. So you put that with it, and I can see what the market's doing, and the 34.1760 would be the resistance if there's nothing that comes of this flare-up and moving the dependence out of the embassies and away, probably out of the Middle East. You're taking a look here, is the market pulling back? Remember, Iran said it would go after military bases, anything affected with the U.S. That's what was said today. I read the words, and it's there. Of course, they said, well, that's if the U.S. attacks first. Well, I would expect them to make that statement, Iran. In all defense, you know, they're saying anything's open if you attack us. But why would they be attacked? Because they want to continue with nuclear development. As we take a look here, and I didn't say nuclear bomb, I just said they want to go with nuclear development. I believe they're after a bomb, but that's me. You have a higher high, lower low, and momentum. You are coming down and you've grabbed hold and you're flat. The gold-silver ratio, gold in this particular environment should move a bit higher than silver, as that's the first thing that goes when there's great uncertainty. Gold is that part of it. Silver is not a precious metal, and I will have people write me and tell me all about that. But any way you want to go about it, $36 to me. We're at 39. Where are we right now? At let me get to the price of silver. Here we are, 36.44. I'm just sorry, that's not a precious metal. $3,000 an ounce is precious. Platinum prices are precious, over $1,000, but I have a problem with that. And I know you'll probably tell me copper's precious at $4, $4.50, $5. It isn't. Higher lows, higher highs in the silver. Just yesterday I said to you, you've got your time frame here where the market's ready to pull back and underneath. As long as this embedded reading stays the way that it is, I think the pros went long today. Today, not tomorrow, not off the break. I think they began their buying today, and we'll see if the market does anything with that. In the copper market, lower highs, lower lows, right into the support. So now the big question is if the PPI comes out, and by the way, let's talk copper for just a second. Here you get what China needs to get its factories going and everything, making peace or detente in some manner with the United States, and copper fell on that news. I found that fascinating, all right? Now the question is, can it rebound from this area? This was a market that yesterday I told you have a bullish bias. It was a break in a bull market, and it still is, as it held that magic 18-day average of closes. And in the platinum market, here's the other precious metal at $1,250 an ounce with an embedded reading. Like the copper, I can make reasons for the market to pull back, and until the red line closes under 79, I think the market will get bought. Last but not least, I decided to give you this red line because it is a red line in the dollar. If you get under 97.68 and you can start embedding, especially, watch out. Everything priced in the dollar takes off. The dollar goes down. Could the dollar go to the 90.88 level? If that happens and it embeds, yes. It could surprise the living heck out of people. Am I predicting it'll happen? Here's what I predicted when I did my dollar report, and you know I did this back right over here. I said we're approaching the fourth price count. Markets rarely get to that number. But if this doesn't hold and you go to a fifth, it's really a disaster because the dollar could crack the 90 level. Well, you bounced from the fourth level. You got yourself up back to the 100, but now you're in the zone. What's it going to do? We could get a head fake. Just because you close under that doesn't mean you have to go down. But everything, if you get embedded, then until it loses it, I'm a super bear. So you put this all together, you try to come up with game plans. And one of the ways you can do it is go to our free offerings, go to our website and take a look at my research, go to our website, take some of these courses, because what you got to learn to do is the best thing for you. And what is that? Investing in you. So you'll see the icons up here. Give them a click, and we hope you join us. I'm Ira. You have yourself a great evening.